Hello, and thank you for joining us at XM.com. This is the Weekly Outlook. This upcoming week may not be rich in its quantity of events. However, these events will be crucial in how things are likely to progress moving forward, especially in the United States. I'm Christina Marujos. Joining me today is our senior investment analyst, Marios Hadjikyriacos. Marios, the most likely outcome of the U.S. midterm elections this Tuesday is a split Congress, which could then bring any new legislations to a standstill. But what could the market reaction be to such a scenario?
Hello, Christina. Well, honestly, I think we're not going to get huge market reactions, but we might see some relief moves in the US dollar and stock markets, and let me unpack that. So first of all, this is a mid-cycle election, right? Americans are going to be voting for their new Congress. Now, opinion polls and betting markets suggest that the Democrats are likely to lose control of Congress. So right now they have control of both chambers of Congress, just barely, but opinion polls suggest that the Republicans are likely to take back the House of Representatives. Now that means 2 years of political deadlock, and funnily enough, stock markets like that. So a split Congress essentially means that it's going to be much harder for the Democrats to pass any anti-business legislation. Tighter regulations, higher corporate taxes, those are probably not going to happen under a split Congress. So stock markets generally like a split Congress, but for the dollar, there's no clear historical pattern. So the reaction in the dollar is probably going to depend on how this election affects Fed policy. So a split Congress, which is by far the most likely outcome, that will essentially limit the government's ability to roll out new spending. Huge spending packages are probably not going to happen. So that means slower growth and softer inflation over the coming years, which again suggests a negative reaction in the dollar, because the Fed might not need to raise interest rates quite as high. So that's how I think that the election is going to play out. But the final note is these are unlikely to be trend reversals. These are likely to be relief moves. A split Congress is already what the market expects. And the final point is we might need to wait a few days before we get the actual results. So we are going to have a lot of mailed-in ballots sent by mail. And like we saw in 2020, it might take a few days before all of those are counted and we have the final results.
I see. Now let's turn to the data front. CPI data for October are out on Thursday from the United States, of course. Fed Chair Jerome Powell earlier this week stressed once again that the Fed's main focus is to bring inflation down. Therefore, could a strong print solidify another triple rate hike by the Fed at its December meeting?
It could. So the markets right now are split on that, almost split. So the market is leaning towards 75 basis points in December, but it's a close call with 50 basis points. Now, the forecast suggests that we're likely to see a slight cool down in inflation. Nothing dramatic, just a minor pullback in the inflation rate. Look, it's going to be crucial either way. So since the market is split about December, any surprises in this inflation report are probably going to drive the dollar accordingly. Now, here's how I view the dollar overall. I believe that the outlook is still positive overall, but we might be entering the final act or the final phase of this rally. So there are several elements that suggest that. For example, the Fed has opened the door for smaller rate increases moving forward. Now, the market is already flush with long dollar bets. Long dollar is already a very crowded trade. And most importantly, the fundamentals for other major currencies have finally started to improve, Christina. So in Europe, we saw a dramatic decline in energy prices. That means that, yeah, we might get a recession, but that recession might not be brutal. So in the UK, we have the new government coming in, the budget crisis is behind us, a little bit of stability has returned to sterling. And of course, in Japan, we saw the Bank of Japan governor this week opening the door for policy adjustments. He said that we could eventually adjust the yield ceiling that we have in place, which is the policy, of course, that has devastated the yen. So It's early days still, and I think it's still too early to call for a proper trend reversal in the dollar. We could still see the dollar hit new highs, but the scope for further gains from here is starting to look limited to me. Or to put it a different way, the risk to reward profile of chasing more dollar strength from here doesn't look very attractive to me.
Marios, thanks so much. This was the Weekly Outlook here at XM.com.